Hi everyone, let's check my bullish and bearish medium time frame and low time frame Elliott Wave scenarios on Bitcoin, starting with my bearish scenarios, of which the first one is a WXY, which means that Y is still not finished and we're looking for a three-wave structure in wave Y, where the most common target area is between the 1 and the 1.236, pulled from the high over here to the low of W to the high of wave X, where you can see that the 1.236 has very nice confluence with the yellow target box, which is sitting between 24,850 and 24.3k, with some very interesting confluences in this area for then potentially a bounce for higher prices once again. Now there's three reasons why we've been looking at potentially lower prices. One reason will be mentioned in my low time frame scenarios coming up later, but the first two are actually mentioned over here. So first of all, during this bounce to the upside over here, we didn't have any bullish CVD divergences on the lower time frame. So there's no absorption going on the lower time frames, which, if this is a reversal for much more upside, is not really something I like to see. I prefer to see a move to the upside, see a retracement, and create some bullish divergences on the CVD. But if I zoom in to the 15-minute chart over here, then even though price is moving to the upside, the yellow and the blue line are moving to the upside as well. So that is basically a neutral CVD and no bullish CVD at least. And what you want to see is a higher low in price, but a lower low in CVD. That shows a little bit of absorption on the lower time frames as well, because we do have some absorption going on let's say the higher time frames, where clearly we are creating a higher low on price and much lower CVDs. So on the higher time frames, or the 4 hour this is, you can definitely see some absorption, but it would be nice to also see that on the lower time frames. And as it stands now, there are no bullish divergences to be seen. So that is something to at least take into account. The second reason is that I had no target box where price was bouncing at the moment. Of course, it can move to the upside because we did identify a support resistance area before price moved to the downside, which was this area over here. We found resistance with these candles, pulled a horizontal line in some of my previous videos, where eventually it said if price moves to the downside, that is the first little bit of support. And that's basically a support resistance flip, resistance over here, support over here, for then potentially a continuation to the upside. But I do like my target boxes to be hit, and I didn't really have any target box over here because the first true support target box is down here, and as you can see, actually to the upside, this one has been hit just now, so that's very nice. But we didn't have any target box, so that is also something to take into account for this potential move to the upside. We didn't have the strongest support in this area, but it might be sufficient for a continuation to the upside, of course. Now the second bearish scenario is actually a bit more bearish, which is a 1-2-1-2, but actually finally a legit one. So this is then a wave 1 followed by a corrective wave 2, and then you have a second 1-2 before then continuation to the downside, where the second wave 1 is below the first wave 1, which is what I like to see. Also, this second wave 1 is shorter in time than the first wave 1, which is also something I like to see. And then now we're working basically on a wave 2 to the upside, where the most common targets for a wave 2 are between the 0.5 and the 0.786 fib, which is basically between 27.8k and basically 29k, where I think that the golden pocket area is very interesting, because right in the middle of the golden pocket area we also have highs, and these are the news highs for the ones remembering the volatility over here. This is like the highs that were made during the news. So news was pumping to the upside, found resistance, and then moved to the downside very impulsively as well. So there must be some liquidity above these highs as well, because there was some absorption going on, as I remember. So that can be an interesting area at 28.3k. And in this particular scenario, we of course then expect much lower prices, as we're looking at an impulse. Now if we then look at the volume of this wave 1 to the downside compared to the bigger wave 1 is actually quite similar, which is absolutely fine. So you can see the volume over here in this wave 1 to the downside, which is quite similar to the first wave 1 that we had to the downside, and that is absolutely normal. The main thing is that if you're going to move to the downside now and price is going to take this low, we would in this scenario expect a wave 3 in white of a bigger wave 3 in blue, and that should be the strongest and most impulsive wave, meaning that if price is going to move to the downside and take this low, you want to see volume increasing massively, right? If that is not the case, it is more likely we're going to get a bounce over here at around the yellow target box as well, for then eventually more upside, or the bullish scenario might play out, which is the one I'm going to show you right now. So if we then switch to the bullish scenario, we have this one over here, where we are looking for an A wave, 5-wave structure, followed by a 3-wave in a wave B, and then another 5-wave structure in a wave C, where the target area for wave C is between the 1 and the 1.236, taken from the high of A to the low of A to the high of wave B, which is hit very, very nicely indeed for then a bounce to the upside. Now, the potential trading setup we had over here, stop loss should already be break even, as the entry was around the 1-to-1, stop loss was below here, but as price is moving to the upside, if this is the end of wave C, which is very likely, like you can count the 5-wave structure in this C, this part over here, well, you don't want to see price move down once again, because I think if price is going to take this wick, it's going to reach the yellow target box, I believe. So stop loss, break even, no financial advice. You have your plan, your strategy, of course. But from an Elliott Wave perspective and a potential Elliott Wave setup, this is a smart thing to do as you expect higher prices. And we are at resistance actually over here. So maybe a small take profit one is always an idea for if price does move to the downside. Yeah, your stop loss is hit, but you still had a first little profit. Now, wave C is a little bit shorter than wave A, as can be seen. The fib time over here taken from the beginning of A to the end of A. And then you put it on the high of B as well to compare wave C in time to wave A in time. And you can see wave C is a little bit shorter than the 1-to-1 of wave A. It's around the 0.618, which is absolutely fine for wave C, as I like to see it end between the 0.618 and the 1.618. So this is actually pretty good. And then we expect a move to the upside, right? That's what we're looking for in this particular scenario. If we then look at the range, it is actually getting quite interesting, because I've been talking about a backtest of the value area low, the blue line over here. So we have this little bit of an excursion outside of the value area. Price eventually had a little bit of resistance. If I zoom in, bit of resistance at the value area low, eventually broke through, and I was mentioning and saying, yo, I'm looking for a bit of a backtest. You know, the safe option is to wait for a backtest of the value area low and then see if it holds, yes or no, because then you can do something like this, move up, backtest value area low, and once we take the high once again, that could be a potential entry, looking for more upside, where if the point of control is going to be hit, it can be smart to move that stop loss to potentially break even, because the point of control is a very important support resistance area. You can see it was hit, price moved down. Over here it was hit, price moves back up, right? So it is an important area to take into account. So make sure you always at any moment trade safe. This is no financial advice, but it is an interesting setup in the typical quote of trading the range until it breaks, right? So we have to wait and see how this develops. But currently, as you can see, price is basically backtesting the value area low. It closed a backtesting 4-hour candle just above the value area low as well. We had quite a wick actually to the downside, but it did close above the value area low. So that is at least nice to see. If we then go to the lower time frames, that is also where it starts to become interesting. So on the lower time frames, we had this target box over here that we were looking for, was hit very, very nicely with the higher time frame naked point of control of the weekly naked point of control at 27.6k being hit over here, causing the resistance for eventually a move to the downside. We still have, however, another daily naked point of control at 27.7k, which actually just missed out. It hasn't been hit, so that is something to keep in mind. But we had this target box over here, and that was then also the target area for a wave Y between the 1 and the 1.236, pulled from the beginning of W, as this is then an expanding flat, beginning of W to the high of W to the low of wave X, giving us this area over here, and as you can see, very nicely respected indeed. That was then also the potential setup. Short over here, stop loss above the target box, looking for downside. By now, stop loss break even, because if price is going to move back to the upside, one can imagine we might push through this target box and actually look for these highs over here, like the news highs at 28.3k, depending on how price develops to the upside, of course. So if we look at this corrective structure, either this is then the high of wave Y and we look for more downside. However, what I've also been looking at or thinking about is potentially this is the high of a wave Y. This is a 3-wave structure to the downside for potentially continuation to the upside. And what you then might get is this to be a 3-wave and then a bigger W. So you basically create a W an X, and then eventually a Y, where Y is another 3-wave move to the upside. X can also be much longer than the wave you have over here. This can only be the beginning structure, second structure, third structure, and then move up in for wave Y. And also the target area for wave X, well, all the fibs over here are common target areas for wave X. So yeah, it's not easy to know exactly what wave X might do. Actually, I have to pull it from this low over here, thinking about it. So there you go. So the 0.5 has been hit, and the 0.382 has been passed. But yeah, all of these are potential targets for wave X, for eventually then potentially a bounce to the upside in a wave Y. But it doesn't really matter, as the short entry was over here. It's either ride with the flow to the downside and see how far it goes, or a little bit of a take profit, stop loss being hit at break even, absolutely fine, right? That's okay as well. We have still like the long setup from the downside over here, like the bullish one. So we just take it as it goes, because we don't know what price is gonna do. Now you do read the bearish CVD on my chart, which actually has to do with the local price action over here, because even though we didn't see any bullish divergences in this whole range, we did start to see bearish divergences over here. So I have to zoom in quite a bit to make it a bit clear, but you have lower highs being formed, and we started to have higher highs on the CVD, and that is this area over here. So no bullish divergences in this whole range, but the first bit of bearish divergences started to exist over here. Actually, from a memory, also over here we had some bearish divergences, but these ones are the most recent ones. So that is quite interesting. No bullish ones, but we do see sometimes some bearish divergences existing. And what is also interesting is another target box that I have between 28.9k and 29.2k for if price is going to push through this level, 28.3k. My next area of interest is potentially the target box at the highs. So we have to wait and see how price is going to develop today. We of course don't know if it's going up or down. We do have news coming today as well, thinking about it. So the news today, let's open it, is at 2:30 Central East European time, PM, that is, as you can see. So make sure to check your time. So high impact news might create volatility, so make sure you trade safe around those hours. And then the bullish scenario is a 1-2-1-2. So this is the low of something. This is a wave 1, very shallow wave 2. The 0.236 actually officially is not even a target for a wave 2, because the 382 is the rare target for a wave 2, and the 0.236 officially isn't even a target. But yeah, maybe in a very rare environment the 0.236 can be part of a wave 2, but then you expect a very bullish environment, with this then being another 2 and actually not really coming back to this area over here, right? Which it did, because look at the wick over here. So in this scenario, this then is a 1-2-1-2, and you expect a bigger 3 to the upside. So you really want to see volume increasing with price moving to the upside. That's what we're looking for in a bigger wave 3. So I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.